Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, Chicago wheat. The dominant pattern here remains, though it is being tested, has been tested I should say, it's come straight back off again since then. The dark blue mid-February to mid-June bearish shift pitchfork, with the dark blue upper time specifically, which is currently at 560.25, being tested last week and to a lesser degree this week. Looks like a lot lesser degree at the moment. Below we have the almost flatlining gold long moving average, currently at 548.25, and the flatlining medium moving average, which is the mauve medium moving average, currently at 538. The gold long moving average capped the market 2 weeks ago, and the mauve late last week and at the start of this week, and it is starting to act now as a base of action. Last week and this week's actions have dispelled any ideas of an August to date double top, as well as a potential September to October bearish cat's ears pattern, but they have heightened the idea of the August to October action being a possible, if somewhat wobbly, double bottom. Hence I've laid out some potential targets above of a primary target X up in the 582.75 area, and a secondary harder to reach target X1 up in the 598.5 area. These of course depend on the market breaking the dark blue upper time, which is, as we can see today, no certain effort. So I'd keep an eye on the main pattern. That's the dark blue bearish shift pitchfork, as well as the gold long moving average, which has been reasonably good, and as I said 2 weeks ago, which could have potential all the way up to the June highs in the 590 area. I also note the congestion below at 545.75 and 539.75. The one 545 is now beginning to be resistance, the other one is still support at the moment. Chicago corn. The major pattern here had been the now broken February to April bearish shift pitchfork. In mid-September, with changeover, the market exited above the upper time, but then proceeded to form a new small bear channel, utilizing in part the now broken upper time. This was until we started to see prices push up late 4 weeks ago over the upper bear channel line and exploit the move higher. Now prices initially looked to the November 2020 high at 439.5 and the lesser Fibonacci line near it as resistance. But they were not good enough, so the market rose up to the next resistance, which is the gold long moving average, which is currently at 443.25. This has previously done an excellent job in capping prices in late September, though not this time, and indeed it could be seen to be starting to act as a base of action today. Above it is the 50% Fibonacci line for 2025 at 54.75, which was more formidable, as just above that was the bright red lower trend line, currently 457 even, to the July 23 to January 24 descending triangle, which capped prices today. I had previously doubts about this one, despite how large it once was, this pattern. So I said 4 weeks ago, and I quote, all this movement higher does raise the question as to whether the action since early August, especially noting the fall since changeover, whether this all is a possible bullish halfway hesitation. I'll ponder on that some more. End of quote. Well, looking back now, I don't think it is a bullish halfway hesitation, but I do note the newly drawn early August to date uptrend, currently at 443.25, which has been quite good in recent days, including today at the moment, since at least October in supporting the market. However, this meets both those two. This meets the uptrend and the red lower trend line. They meet in early December, and though as the market gets squeezed between these two, something will have to give, and it could be quite explosive. So we'll see. Kansas City wheat. Okay. As I said 2 weeks ago, and I quote, we have a major issue here. And that's the end of that short quote. The original driver of this is the market is the February to March bearish shift pitchfork. Has given way on the top side to the newer bright green March to June bearish shift pitch hawk, and this in turn has seen the bright green upper tie, currently at 529.5, pierced and broken, and late last week and early this week being used as a base, including today for a move higher, but today is just basically acting as support. Earlier, the flatlining medium moving average below, currently at 528, the mauve medium moving average below, currently at 528 even, had eroded the rise, but this is now support for the latest move higher as well. And it's only the combination of the slightly declining gold long moving average above, which is currently at 548, and the March 2024 low at 551 that have capped the rise. And even though today's been quite a bearish day at the moment, I'm not sure how long this may be. You see, we have a scenario here similar to Chicago wheat, but possibly more defined. We have an August to October double bottom pattern, but with a primary target X up at 575.5, even after all this move, and a secondary hard to reach target up at 591.75 area. What is stopping this, apart from the obvious gold long moving average and the March 24 low, is further above, and that's the dark blue lower trend line to the November 23 to April 24 descending triangle, which is currently up 558 even, and the March 21 low at 559.5. And to be honest, neither of these are that good. So it comes down to the gold long moving average and what the market does to it. At the moment, it's pulling away back down below it. It has been pierced before back in June, but price has spent only a short time above it. And if this may happen again, but I'm hoping that if it does, then perhaps it would be enough to achieve the primary target X. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.